Good afternoon, ladies and gentlemen, and welcome to the Trinity Exploration and Production PLC investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so, and we'll send you an email to notify you when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and we'll be very grateful if you could give that your kind attention. And then I'd now like to hand over to Bruce Dingwall, Chairman, and Jeremy Bridger-Ling, CFO from Trinity Exploration and Production. Good afternoon to you both.
Hi, Mark. Thank you. Welcome, everybody. Just to show Jeremy and I are real, we've got our videos on, but I think in the interest of preserving our bandwidth, etc., we are going to turn those off so we don't lose the audio, if that's okay. So thanks for joining us. Thanks. Well, welcome, everybody. First of all, I hope, thanks for joining, and I hope you and your families are all well in these uncertain times. Obviously, in the UK, in various parts of the world, we're beginning to see some light at the end of the tunnel. But in Trinidad, unfortunately, we're going through a bad second spike. There was last year, during the first phase, Trinidad actually did very well. But there's a low number of vaccines have been available in Trinidad, and we're going through a bad second spike. And a state of emergency was actually declared on Sunday, just gives the government powers within the country. It hasn't affected us particularly in terms of operations, although we're having to put in new quarantine controls and things for our people working off the East Coast. So Jeremy will go into those in a bit more detail. Just the opening slide. The present is the key to the past was a statement by a geologist sometime a century before last. And that's a picture of the Nariva River going through the Nariva swamp in Trinidad. And what that does is illustrate that we're beginning to chase reservoirs in 3 dimensions, mapping them using our new onshore 3D seismic data in particular. So as we're transitioning the company from just drilling gapology wells, we like space wells onshore, to really putting some serious science behind it. It's not just a pretty picture that I wanted to show you, the scale of what we're doing. Sorry, gone the wrong way. 2020 was a tough year, but considering the COVID spike that we had across the world, actually the company did really well. As we said in the disclaimer slide here, the company has been through much in the last 5 to 6 years. Pretty tough, a robust and focused team we've got. So I think we managed last year very well because of that. And we're here today on the front foot as a company by design. We had a pretty good year last year. Obviously, oil prices went down, but everything else went very well for us. And for the 5th year in a row, we hit our targets. So we're here by design. This slide really illustrates that it's a great photo. I'm a geologist, so I'm going to show these. That picture on the right is our head of subsurface, Dr. Ryan Ramsuk. And that's one of our reservoirs outcropping about 11 kilometers from Trinidad and Echo, just behind the BP office, actually, down at Galeota. So massive sandstone sitting there in the Gromon sequence. So, where are we? Well, the investment case, as we've described quite a lot, the business model is set. As I said a minute ago, we've had 5 years of delivery of our business. But most importantly now, looking forward, is that the pathways to scale are firmly established. And these are pretty exciting. And actually, for the first time, there's multiple events within our control, and some with our control, going to occur in the next few months. And surrounding all that is obviously our local knowledge. We're all from this island and know it extremely well. So we are a low-risk, high-margin production business. We're not an idea, we're a business. And our operating and business model is focused on automation right now, as we've talked about. That's not just us, that's many businesses and many segments across the world. We're very 3D seismic data-driven, as we ought to be. And also we have this relentless push on operating costs and on our operating margin, because after all, we are a business, we are a factory. So our unit margin is extremely important to us. But as we get on the front foot now that we've been putting together over the last year or two, we need to partner where appropriate. So care and heritage in the upstream, in the transition and renewable space, working with the National Gas Company, the University of West Indies, and in the technology space, Technip, Axis, Weatherford, to support us as we expand our business, and also looking to share risk and Capex with those partners. And really importantly, and what you'll go on to see, is that we're really accessing world-class technology from around the planet, not just locally, but making it correct fit for Trinidad, be it automation, be it 3D seismic, be it ESPs. And on the growth side, there's two sorts of growth. Obviously, one is organic. The onshore I'll go on to describe in a bit more detail, but interpreting 3D, we're sort of into our third month of it, and it's pretty exciting. And obviously, our drive there is to couple, high-producing horizontal wells in non-depleted areas to automation on the surface to get a completely different result. Also, what we're finding, and I have talked about this many times before, is that we're correlating seismic and correlating wells is throwing up all sorts of questions as to how wells have been correlated in the past. So we firmly believe that some sands have been miscorrelated across the entire onshore Trinidad. And not until you understand that correlation, which is seismically driven, can you really understand what your opportunities are. You need to know where you're going to pump in gas or pump in water or pump in some other solution next to your offtake wells. So once we've better understood our stratigraphy, better understood how our sands are distributed, then we can look at EO opportunities in detail. Again, organically, offshore, the Echo platform, the Echo fault block, that's gathering pace, and I'll show you that in some detail later on in the presentation. Again, automation on that is hugely important, and it will be the first electric platform in this part of the world. And if we can get it right, we're trying to get wind and solar power, so green electrons going offshore to automate the Echo development. Inorganic, if you like, is the renewables and transition fuels that we've been working on for some time ahead of the COVID catalyst, if you like, that's propelled everybody towards these things, or talk about them more. But also the PS4 acquisition is a great acquisition. Again, I'll talk you through that in a second. But we're in the data room on Jubilee. We look like that's because of COVID going to be delayed probably a month or two because we haven't managed to get on the platforms yet. And obviously the Northwest District bid, the data room's not open yet, but we expect that to be open very soon. So it's all about local knowledge, creating competitive advantage on the ground through these applications, using international standards to do so. Jeremy, if you could take us through the operational financial review. Thank you.
Thanks, Bruce, and thanks to the audience for joining us today. As Bruce mentioned, he gave an overarching view of where we are and how we're trying to achieve it and some of the growth pathways. I'll touch on the operational and financial bits now. There's a lot more detail in the RNS that we put out to market this morning, so I'll just go through the highlights of that. I think one of the key elements that we'd like to make is we've been breaking even below $30 for the last 5 years, and when Bruce mentions that we are designed to be where we are, and it's not by chance, the last 5 years demonstrates that when you look at our financial performance. Just go to the next slide. Going through our results summary here, from a production basis, we grew production year on year. That was largely driven by the 2019 drilling program, where we stopped drilling in December of 2019. We brought the wells onto production, and during 2020, the team focused really hard on keeping the production from those new wells and our tier 1, tier 2, and tier 3 wells. So those are the higher producers within the portfolio of north of 200 wells. So we tier the wells so we can focus there. And we actually grew production 7% year on year. As a percentage of national production, we grew from 5 to 6%. Actually, that's because some of the other oil production in other assets went down, but Trinity bucked that trend, and the team was on the ground every day. We kept going after workovers. We kept a barrage of RCPs, the recompletions, where we go uphole into existing wellbores, and we kept the production going from that perspective. This year, I'll describe the guidance later on for what the production guidance is. Cash balance increased significantly from 13.8 to 20.2 million. And in a couple of slides, I'll walk through the key elements that drove the cash balance. But really, what was driving that is a good, strong P&L with a low operating break-even, which again, we'll go on to discuss a little bit. The adjusted EBITDA was down year on year, but that is driven by oil price. So whilst the areas that we were in control of, which is our cost structure, operating costs, the G&A, and our production, those were in good stead. The wider oil price environment was very volatile, particularly in Q2 of last year, and that is what impacted our EBITDA negatively. So certainly, from a guidance perspective, we achieved the production guidance, and the bottom left-hand side, you can see the operating break-even. We had guided the market that we'd be around $20.50, and we managed to come in a little bit lower than that. The operating break-even is a key element from us from two perspectives. One, it ensures that we're resilient to low oil prices in the event that oil prices go to a low level and stay there for a prolonged period of time. But also, on the other side, it allows us, when the oil prices go up, to leverage on that and build operating cash flow. So 2001 was an exceptional performance in terms of the break-even. Our typical break-even tends to be around 26, and for this year, we've guided that we want to be around 26.50 for 2021. Net cash balance, the difference there between the cash and the net cash balance is really the $2.7 million that we drew down from CIBC in April of 2020. And the reason for that, if anyone can recall, in April, oil prices were extremely volatile. WTI went negative actually during April. The view from the board at that point in time was to make sure that we battened on the hatches and cash. We had as much cash on board because we didn't know what the outlook would look like based on the pandemic that was unfolding at that point. We did draw down, so we actually took on some debt, whereas in 2019 we had no debt, but still net cash grew by 27%. Cash operating costs down by 7%. When we examine that a little bit further, you'll see the absolute number stayed relatively static, but it was the increased production that allowed us to have a low operating cash. And finally, from a fiscal reform national landscape standpoint, the government on the 1st of January 2021 enacted that all small onshore operators producing 2,000 barrels or less of onshore production, they would not be subject to SPT at the $50.01 as it was before, but at $75, thereby given a significant amount of room in terms of an uplift with that price at which the SPT kicks in, and a huge encouragement for us to get into producing some more oil and continuing to invest. Key financial metrics here. This is a slide that we usually have in, and whilst the comparison from 2019 to 2020 for some of the metrics don't look positive, the important point to take is that they're really driven by the realized oil price, which is down by 35%. So if you follow that through to your revenues and adjusted EBITDA, those are down. But if you look at the break-even, as we mentioned before, down from 26.4 to 20.01, cash up from 13.8 to 20 million, and net cash balance up as well, and cash from operating activities a healthy $10.3 million. So increased production whilst we had a lower oil price, but with a lower break-even, we managed to drive a better cash balance coming out of 2020 in comparison to 2019. Digging a little bit deeper into the operational cost structure and the hedging. So OPEX per barrel went down by 7% and G&A by 16%. The OPEX per barrel, as I mentioned before, year on year, we were around $16.4, $16.5 million for both years respectively. And what happened with the increase in production, given that we have a largely fixed operating cost base, around 80% to 85% of the operating cost base is fixed at these levels of production, we were able to leverage that and meant that the OPEX per barrel went down by 7%. G&A on a consolidated basis, down from 5.1 to 4.3 per barrel. That is, I would say, from a G&A perspective, I would expect us to be more on a $5 per barrel on an ongoing basis. But the 4.3 from last year reflects where, again, we battened down the hatches. We kept things tight from a G&A perspective. We didn't have any impact to headcount or to salaries. We kept that whole because that was part of the tactics that underpin the operational performance, actually. By keeping people in a stable focus position, it allowed us to keep going and keep momentum going on the ground. Just turning to the right, the percentage of production hedged. During 2020, we benefited from a significant amount of hedging income to the tune of $2.4 million. We further reinvested 1.1 of that into taking out further instruments for 2021 and into 2022. For 2021, we are hedged 49% of production for the remainder of this year. And we've used a variety of instruments from put spreads and three-way collars. Into 2022, we have 11% of production hedge for half one. Our intent is to build that up to the 49-50% and to ensure that we use the instruments that do not limit upside disproportionately. We have market orders in place, and as long as the oil price gets to certain levels and the volatility for that oil price is in the correct space, then those orders will be filled, and we'll see those levels for 2022 rising as we put those hedges into place. The bottom right-hand side, the operating break-even, again, the graph demonstrates the reduction year-on-year from 19 to 20, whereas the adjusted EBITDA also fell, but that was oil price driven. Moving on to the cash flow after coming from the P&L. So a good, strong P&L. It meant that the operating activities of the business, we saw $10.3 million of cash inflow there, adding to the 13.8 that we started off the year. We had investing activities of $6 million, and that comprised $5 million on asset integrity. That is infrastructure work on the platforms or on various infrastructure in relation to our production. But we also continued with a barrage of recompletions. So that contributed $5 million in terms of investment, and we put another $1 million towards taking the Galliota project forward, getting through to as close as we can to submitting the FDP. And in fact, we'll be, as Bruce will go on to describe, we'll be submitting the FDP during the course of this week for the Galliota project. The financing activities of 2.2 is largely driven by the drawdown of the $2.7 million CIBC facility. The net impact of all of that is cash rising from 13.8 to 20.2 million. And the balance sheet summary on the right-hand side, I won't go through the balance sheet at all, but down towards the bottom, the key element for me is our current ratio, which is really your current assets over your current liabilities. And that went from 2.6 to 2.9. So an increase in the current ratio, it means that our health from a liquidity perspective is stronger. And it means that the growth pathways that we will go on to describe, we have a certain level of financing on our balance sheet to be able to discharge those and take the company forward. ESG. ESG is very much in the narrative of nearly every discussion, particularly when it comes to oil and gas companies, and particularly for public ones. From our perspective, ESG has come to the fore in terms of the narrative, certainly, but what we have been doing, if we reflect on, let's say, the East Coast, where over the last 4 or 5 years, we've reduced operating costs by 40%, increased production by 20%. A large part of driving that is our logistics costs, and by changing logistics, optimizing it, making it more efficient, we have inevitably reduced emissions, as an example. And we have taken that case study in the East Coast, and that is what we are doing onshore in our largest field, WD5 and 6, where we are automating 31 wells. And by the fallout of that is that we'll also have optimized logistics, which means reduced emissions. Just using that as an example or an analogy to describe that we see ESG and all the elements within as helping to drive better financial returns and more sustainable financial returns through better governance. From a social perspective, I think over the last year, certainly Trinity has continued to work within not just within our employees. As I mentioned, we kept everybody whole. We made sure that we were contributing not to just the employees, but making sure that the employees and their families' stability, there was that continuity, but also within which the communities where we work, such as the Galliota, Guayguari area, the Rancho Quemado, Palo Seco, and Erin area, we continued to work with the communities there, try and provide support, particularly to kids, but also in terms of food security, we also helped out from that perspective. And I think as we work through this next COVID spike in Trinidad, as we understand what impact it will have on us and we put our business continuity plans into place, once we've worked through that, I think the next step will be looking at the communities and seeing where we can help as well. From a governance perspective, we subscribe to the QCA code, and the governance ensures that the strategy set by the board filters through to the management team, down to the staff, and that we govern the business in accordance with what the board's guidance is for our strategy. So to wrap it up, financial strategy we see is the ESG is actually an element of helping us become better in terms of how we run our business and generate better financial returns.
Thanks, Joe. Yeah, thanks. So this photo really shows two things. One, it shows people, and one, it shows our onshore seismic database, and the two 3D volumes, and also our regional seismic database. So really, modern companies are about data and people. Just on the people side, I'm sure many of you have worked in smaller companies, and you get a great loyalty, a great sense of teamwork, and great camaraderie. And we certainly have that spirit in Trinidad, which does differentiate you from very large organizations. So there's a huge energy and commitment in the business. And actually, without all those people there, socially distanced in a muster in the morning, we wouldn't have the company that we do. But coupled to that, and just as important, obviously, is our assets, our physical assets, not just our human assets. And data has always been important in the oil and gas business, but data is very much at the forefront of the way the world is beginning to operate. So as we transition the company from just being a good production outfit, if you like, we're really wanting to take ourselves to be a leading producing outfit, kind of in a global sense. And to do that, you need the best teams, the best people, and the kind of best data and the best data management. This slide shows the onshore. So what is often forgotten as we talk about WD2, 5, 6, 13, 14, etc., they are individual fields. They are sub-licenses within the giant onshore forest reserve Grand Ravine field you see there, which is the huge green blob, that's produced over 1 billion barrels to date. Probably a recovery factor of only 10 or 12%. And there in yellow and now in fawn, you can see our WD 5, 6, 2 and PS4 in the southern area and our blocks in north. We're beginning to build quite a good, two good geographies, if you like, two good trends in the assets that we've got within that giant complex. So, and also just to note, Northwest 3D, that's the entire 3D volume that exists that we believe will form the major database to the Northwest data room. And the Jubilee area to the west there you see offshore is the one that the data room that we're currently in, and we'll get back to them in a minute. So these licenses will be issued very soon. Some of you might have read that sadly the energy minister passed away about a month ago. The new energy minister is Stuart Young. He was the deputy prime minister and the minister of security. He's a lawyer, but he's very commercial, a young guy, very driven. And actually many of the big deals that Trinidad's done on a global basis, he's kind of been the closer commercially. So we're very sad to see Minister Khan pass away, who we knew very well. But Mr. Young brings a certain energy and a different approach, which will be, very commercial. And he's the right-hand man of the Prime Minister, which is also handy in getting approvals and things. So we do expect, it's been a little bit of hiatus because of change of ministers. We do expect that pretty soon. And obviously we've had SPT reform on top of that. So on the 3D seismic data, we're into month 3 of interpreting it. We've supplemented the team with 2 new hires out of BP in the subsurface team, and they are deep into the data. They've had the first pass looking at the northern volume and the southern volume, and now they're working in some detail in the southern volume. They have picked their key horizons that they can map both locally and regionally, and now they're getting down to the detailed work of tying in many wells into our focus areas on those licenses. And we're already seeing some very big differences to what anybody who's ever worked onshore Trinidad for what had been perceived in the past. As I've stated many times, nobody has really had a good look at the onshore in terms of the stratigraphy and how that's been deformed through time for a very, very long time, and nobody's done it with having good quality, very good quality in part 3D seismic data. So we're really not quite reinventing the wheel, but we're having to look at the rocks and the layering of them and the deformation of them in a very different way. That's going pretty well. It's throwing up some quite academic challenges to us because we're seeing angular unconformities. We're beginning to understand why certain rocks trap in the strangest places, and will have big implications, not just for ourselves actually, but for how that larger area is exploited, we feel, going forward, and other areas of Trinidad. So the bottom line is what we're doing is we're creating tremendous competitive advantage, we feel, through those two small data sets as the window into the much bigger picture in southern Trinidad. And Dr. Ramsuk, head of subsurface, is also a senior lecturer at the University of West Indies. So we have great intellectual horsepower working on this. So as I said, we're only into month 3, but it is showing a different layering of the rocks and a different reservoir architecture within those layers, which is incredibly interesting. And hopefully, as we get into sort of third, fourth quarter, we'll have a very different view of the subsurface and be able to describe that in more detail. And it's very interesting that, you know, we've got the NWD data going to open up shortly. And so we've got 3 to 4 months of having looked at this data set, even a subset of it. So we know what anomaly is to look for, where the highly productive areas are, where the high sand content is. And also the Jubilee area offshore, while it's marine, it's the same rocks, it's the same delta and the same age. Some of them are a little bit younger to know, but the same sedimentary system. So again, we're learning much more about the architecture of these reservoirs, the distribution of them, that we can apply to looking at that data as well. And ultimately, we want to build an inventory so that we can get back to drilling. This isn't an academic exercise. This is a deeply commercial one, but it's based upon really good science, and we want to get back to drilling, you know, high angle stroke horizontal wells in areas that are less well drained, less well depleted, and where we can see good seismic events that we can geosteer our wells and deliver 2 to 3 times initial production rates and 2 to 3 times reserves per well. We're also seeing deeper structures and deeper targets that we hadn't been able to see before because we never had the seismic. So quite a change in our understanding there, and it's progressing well. This is just a look at the PS4 area. Obviously, we announced this a few weeks back. So this is just a blow-up map. You can see 5-6, the left-hand map, and WD2. I haven't got all the wells on this, but I'm just showing you some of the wells in 5-6. But you can see the next 2 maps are just 2. I've just picked 2 sands, the lower forest and the upper cruise. They sit one on top of the other. And you can see that PS4 sits right next to the sweet spot, both in the lower forest in the northern area there and in the upper cruise. And just to remind you, W5, 6 and 2 produce over 1,300 barrels a day. They are really, really good assets. And PS4 is contiguous, particularly to 5-6. And just by way of illustration, in 5-6 in the last 30 years, about 50 wells have been drilled, and in PS4, only 6 have been drilled. So we see there's lots of work to get on with there. But again, what's great is we now have a contiguous area, and by chance, 80% of PS4 is covered by the seismic that we have on 5-6. So we have a pretty good look at it. And so it'll be a joined up interpretation right across that area, which is becoming quite a dominant spot for us. So we're pretty excited, but obviously we've got to close it, complete it, go through the regulatory system, and then get into look at infrastructure and a quick workover plan, see if we can restore production from sort of 90 barrels a day that's up now and get that northward pretty quickly, and then integrate the 3D and well data and develop that well inventory and get back to drilling. So we're very happy on that acquisition. The next slide is going off the East Coast, and it's a new slide for you. And we'll start in the top right, if I may. But as we've described, there's a whole new legal and commercial framework. Again, we're very close to getting this signed off by the Attorney General. Obviously, with the change in the Ministry of Energy of Minister, again, it's a little bit of a hiatus, but we do expect to get the approvals fairly soon. And as Jerry mentioned, the field development plan, all 305 pages of it, is being submitted to the Ministry of Energy this week. That's a big event. But front-end engineering design activities continue, particularly on the onshore tank farm, with Wolseley Parsons reviewing that for us, and on the shore crossing, the pipeline crossing. But this will be first of its type in this part of the world. It'll be an normally unmanned electric platform powered from shore. And as you can see, the top left diagram there, the tank farm, we've got some windmills there now, because we're looking to see if we could power this using both wind and solar energy. This is a very windy part of the West Indies. We've done a satellite first pass study with Mott MacDonald on the wind potential, and it looks pretty good. So top right, project information, 8-well platform, future-proof for expansion with T's and lines, etc. So we can look at tying back other areas like Foxtrot and Golf. Power from shore, as I've said, renewables ready, 25-year life. It will be connected by an 8-inch flexible export line back to shore, a new one, which will also tie Trinitys back into. And it's remotely controlled from the tank farm through fiber optic communications system down the bundle. The next one along to the left is the Galeota tank farm, which we're looking at increased storage capacity, water treatment, etc. And we'll be able to control everything offshore remotely from the control room there. Now, the main block diagram is a representation of the Galeota anticline. If you look at the right-hand side of it, you can see the tight fold right at the crest of the anticline, where the oil is reservoired. In green, dotted green is just by illustration, is the Trinitys area, the 5 major fault blocks we have there. That's produced over 30 million barrels to date from those 4 platforms. Echo, which was the old T-Gal, is just the next fault block along going up the anticline, and that's got reserves net to ourselves right now of just under 50 million barrels, about 21 million gross. But it will be developed through a much more simple solution with 8 wells rather than the scores of wells that drilled before, because we'll be looking at horizontal wells and big electrical submersible pumps from day one to drain that, looking at a peak production of about 4,000 barrels a day. And then, of course, we've got this northeast appraisal, Foxtrot, just going along the anticline to the next fault block. And while there are wells a little bit further on to the northeast, we think it needs an appraisal well before one will commit to drilling to a development. But it's a complete cut and paste of putting in a new platform there and tying it back. Same to the next fault block to the south, to the southwest, which is the Gulf area. There is a well on that, but it's down dip of the oil water contact. So again, we think we need to appraise that well to look at reservoir continuity and make sure that any platform that's put down there would be able to drain it. So pretty interesting. What we do now is, once we're regularized, the FDP is obviously is in now, we will look as how we're going to finance this through, and Jeremy will talk about that in a second, but we would look to offset some of the risk and capital requirements on this project, which is about a $150 million project, by looking at farm down. But we think we've done some really good work. It's very innovative. It's pretty groundbreaking in thinking behind it. In fact, it's very groundbreaking in the thinking behind it, being electric and zero emissions offshore, etc., and sending green electrons offshore. So we'll get into that in the third quarter as part of our financing round. If I hand back to Jeremy now.
Thanks, Bruce. Just a quick slide to show some of the partners that we are working with across the various work streams that Bruce has just described, from Kane on the various bids, Worley Parsons in terms of engineering, NSAI, and so on. I won't go through all here. This is a slide more for reference for later on. Let me just move to the next slide, one sec. New business and value catalysts. We've described some of these, so I'll just recap here pretty quickly. As Bruce mentioned on his earlier slides and then on the Galeota slide, the intent of the company and the board is to do a Galeota farm down, whereby we'll share in the risk and reward with what we think is a very exciting project. As Bruce described, a very innovative project. Certainly from an ESG standpoint, it probably has some very strong credentials, not just locally, but internationally. From an economics perspective, it is a robust project, and that is only enhanced further by the significant tax losses that we have to put towards that project. So we think we have an attractive opportunity, and we look forward to marketing that into Q3 and Q4 of this year. The Jubilee bid, which is being taken on by the National Oil Company, started off with around 30 different, I would say, people who have expressed interest. That was then narrowed down to a field of what we understand to be around 3 players, of which the Trinity and Cairn consortium is part of that. We're working through it. There have been some delays because of COVID. For example, Bruce mentioned we were due to visit the platforms, but that has been delayed until the current spike in Trinidad is more manageable. And I think operators on the whole are a little bit more comfortable that the enhanced business continuity protocols that have been put in place are adequate to protect people. So with that in mind, it may be that the bid, which was currently scheduled to be lodged in by the end of June, may slip by a month or two. So once we know a little bit more about that, we'll make sure that you do if it's material. On the Northwest District, Bruce, in the onshore slide, a few slides earlier, illustrated the Northwest District area outlined in the black line, which relates to the Northwest, the NWD 3D seismic survey. We have a part of that, which are the 2 windows over our assets in the Faizabad WD13, WD14 area, and over the WD2 and WD5 and 6 areas. And by having those windows into that wider seismic survey, it allows us the ability to be able to start to understand that and to create our models so that when we get into that data room, hopefully, which will be later on this month or early into next month, we have a bit of an understanding there already of the data sets that are there. So we are very much looking forward to that, not just from the seismic perspective, but also because the onshore is an area where we've been participating for a long time and we have a good core competence there. Transition fuels, the micro LNG, Bruce sort of mentioned a little bit earlier, we are working on that with the National Gas Company to find the right gas source and then, of course, find the right market for that. That's going along in the background, and we have recently we signed a memorandum of understanding with the University of the West Indies. Certainly from a technical perspective, they have been looking to perform a wind resource assessment locally, and with our project, we present them with the opportunity to do so in a localized area and perhaps take something through from what was a desktop study onto an actual data gathering in the East Coast, Southeast Coast there. And if that technical feasibility looks promising, we'll then perhaps move that forward to a commercial and then perhaps move it to a project stage. So a very exciting project for us to embark on there in terms of data collection. And it'll be, if we do move ahead with that, it'll be the first wind data assessment being conducted in Trinidad. From an acquisition standpoint, in describing what we have done with PS4 from the seismic, from an automation perspective, from a data perspective, we are creating a lens that allows us to look at assets both onshore and offshore with a different lens that allows us to see value differently. So we'll continue to scan the horizon, look at what is there, and if there are opportunities that we think are useful for us, I think acquisitions will certainly be on the plate for us. So to recap, quite a few different areas here that could impact us from a cash flow standpoint, from a production standpoint. We look forward to moving Galeota forward, and as Jubilee and Northwest District come together, these 3 projects have the potential to transform the production of our business significantly. So we're looking forward to that, and we'll update you as and when news becomes available. Stepping back from the company and looking a little bit wider at Trinidad, we thought it was useful to describe to the audience what is happening locally here, certainly in terms of gas and oil production, and then the main players. So the graph on the top right-hand side shows the gas production, which is the pink line that is dropping off going from 2019 into 2020. And gas production is the heart of the economy in Trinidad and Tobago. So with gas production going down, there are significant ripple effects within the economy, and it relates to the downstream plants, it relates to a number of different areas. So there is a key drive locally to find out what can be done to increase gas production or to make better use of gas as well. But more key to us is the oil, and you can see oil has not fallen off as dramatically as gas has, but it still is in a decline mode. Last year, during 2020, I think the COVID impact of particularly onshore operations can be seen here in terms of oil, but just generally, there has been a downward trend in oil. When you couple that with the graph on the right-hand side down at the bottom, and you look at the production, you can see that most of this production in Trinidad and Tobago is done by the larger companies, the BP, EOG, Shell, the National Oil Company, and BHP. it shows that there are the ecosystem in Trinidad is largely dominated by 5 large players, and there are not many mid-sized players. There is Perenco in the oil space, and then there's Trinity. And we feel that in this supercharged hydrocarbon basin that is Trinidad on the west coast, on land, and on the east coast, that there's still an opportunity for oil production to grow. And with some of the projects that we've described, Galeota, Jubilee, NWD, we think that there's a space for us to grow into. And when you factor in the fiscal reforms that recently happened onshore, and as soon, and we are lobbying hard for those to happen for the offshore mature fields as well, such as our Galeota field, we feel that the environment, the landscape is being set for what is, a mid-size opportunity or mid-size opportunities for companies like Trinity to grow into. A quick recap on the guidance that we would have provided earlier. This year for 2020, without drilling, we plan to be between the range of 29 to 3,100 BOPD, and that will be supported by Capex of between 6 to 8 million, again, without drilling. And the plan for drilling, to reiterate there what Bruce said, once we complete the seismic review of the onshore, we will then use that to upgrade and augment the hopper wells that we have. So whilst the environment is certainly set in terms of oil price and SPT threshold being kicked upwards, from a technical perspective, we aren't quite ready yet to resume drilling, but we're hoping we can do that towards the back end of Q3 into Q4 of this year. But that will be guided by the technical feedback coming from the team. And in terms of hedging, absolutely, while the oil price is in a good place, that is the time when we should be hedging. Hedging we see as insurance, and keeping the hedges in place allow us the certainty that we can move forward with our Capex plans and not have to worry as much about the volatile oil prices that we see. So I'll hand over to Bruce to wrap up.
Thanks, Jeremy. I think there's been a pretty counter-cyclical move in oil and gas globally. And I think by virtue of 5 or 6 really hard years of work of getting this company into a great financial position, we now kind of put ourselves in a unique position, actually, in this counter-cyclical event that we're in. And I hope we've illustrated that, our push in automation, our push in 3D, in sequence photography, and redefining the onshore is giving us real competitive advantage, such that we can take the company forward. And I think it's really important to partner as well, to share risk, to share capital requirements, but also to really partner with technology companies like the ones we do, be it Technique, be it Weatherford, be it Axis in Aberdeen that do our dynamic modelling, etc. So all that enables us to deliver. Where we are ready to scale, the pipeline, as we've illustrated, is both kind of an internal one and external one, and our model fits it all. I think for the first time in a very long time, the next 6 to 8 months, we have a lot of news flow. We're going to try and capture everything we're looking at, but no matter what happens, we've got some big events happening this year. Some we can control, most we can control, some we can't. But we're in a great position to leverage this business and further lock into, which is very important these days, ESG credentials. But it's not just, as Jeremy describes, it's another layer. It's to ensure that actually our business is more robust and our bottom line's better. So in the end, as I think most of you know, we are shareholders. We are owner managers. The board owns 25% of the company, and through family and friends, it's over 40%. So we're here to create a yield, an equity yield and a cash yield for our shareholders as we move this business forward. And I really think, particularly in Trinidad, which is a unique proposition, we are leading the change, and we are setting a standard that is ours, and we're innovating. So I think everything is lining up very well, from a lot of hard work from our great team and our stakeholders to deliver this step change in the size and breadth and value of our business. Thank you.
Bruce, Jeremy, thank you very, very much indeed for updating investors this afternoon. Ladies and gentlemen, can I please ask you to continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the team take a few moments to review investor questions submitted already, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard. And I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide your feedback in order that the company can better understand your views and expectations. Bruce, Jeremy, we did receive a number of questions pre-event, and thank you to those investors that submitted them. A couple of them have been bunched together given they covered a typical theme, and one of those was around echo. The question reads as follows: offshore SPT is of course always factored in as given your financial and business decisions with respect to new drills. One cannot rely on its abolition. So to what extent is the problem regarding FID of Echo and Teagle development as a whole?
Hi, Jeremy. Do you want to attack that one first?
Yep, sure. Thanks, Bruce. Thanks for the question. The Galeota project economics aren't complete as yet. As it moves through its various stages from FDP, then through to FID, the economics will get tighter and tighter. But what we have seen is that the project is quite robust, certainly, and from a comparative perspective, Capex per barrel is very competitive and in the lower quartile in comparison to other projects that we looked at globally, in particular projects in the Gulf of Mexico, which is perhaps more directly correlatable. So the economics are quite robust across a broad range of oil prices. SPT does take a chunk of the cash flow away as you model from 5001 moving upwards. And to that end, we are lobbying very hard with the government to get some similar relief to what we've seen with the onshore for mature oil producing offshore fields such as ours. And as you said, whilst we can't bank on that, we are working very hard to make sure that the economics can survive through that broad range of oil prices, even inclusive of SPT. And so far, it looks very encouraging. Added on top of that, we have the tax losses, which are quite significant on the East Coast assets. And these also help bolster the economics of the overall project.
Thank you very much indeed. The next question we received reads as follows: are you actively searching for more onshore undeveloped wells? If so, is this part of your upscaling process?
Maybe I can have a go at that, Jeremy. We've within our own current licenses, there are wells that are idle, so we're always looking at those, particularly wells that we might have brought back on only do 5 barrels a day. Actually, with automation, they might do 10, 15, or 20. So you might bring some wells out of retirement that might have been there before. But things like PS4, we've always got our eyes on assets like that, but they have to have good strategic fit. The rocks have to fit with what we know and what we like. And we've got to have a clear plan and a clear understanding about how we can add value to a new asset very clearly before making an offer and closing on something.
Thank you. The next question reads: are we leasing SCADA or purchasing them? Can you give us some figures, please?
Probably, Jeremy, you're best to answer that one.
Yeah, sure. Thanks, Bruce. We purchased our SCADA units, and these we purchased from Weatherford, in particular for the well automation. We have SCADA actually on our generators as well too, and that's a different provider. So SCADA really references supervisory control and data acquisition. We've purchased all the units that we have, and a typical unit is circa between 25 to 30,000, depending on the size of the unit. So each unit will vary, and we have for the onshore units, we have between 20 kilowatt to 40 kilowatt size units, which refer to the variable speed drives that run the artificial lift.
Thank you. We've got two more pre-submitted questions, the first of which reads: do you think the lease extensions will be done by the end of May?
Jeremy, you might want to answer that.
Yep, sure, I'll take that. Certainly the guidance that we have is that it will be done by the end of May. Bruce mentioned a little bit earlier that the energy minister passed quite suddenly in late April, and that is actually with replacing that minister getting up to speed, coupled with the pandemic and the COVID spike that Trinidad is having right now. The attention of the politicians, of the government right now is there. We've had guidance that will be done before the end of May, but I'd like for that to happen, but it could slip by a week or two.
Thank Thank you very much, Jeremy. And then the final question reads, anything big showing on the Trinity land from the 3D and 2D seismic data? If you could expand on that.
Anything big? It's one has to be very careful when one has proprietary data, and that we need to fully understand what we've got and see how we can use that data to leverage our own assets, but leverage into other assets. So, as I said, the data is actually of very good quality, but it's still relatively early days. We're into our third month of opening up the Pandora's box, as it would, and looking and retrofitting, 50, 60, 70 years of production data into a new 3D volume is a lot of work. But we will be very careful how we release our competitive, how we message what we're doing. We've got to be very careful because that's real competitive advantage in this business.
That's great. Thank you very much, Bruce, and to Jeremy. That takes care of all the pre-submitted questions. So thank you for those investors again for submitting those ahead of today's event. And perhaps I could hand back to you, Bruce, and to Jeremy. Obviously, investors have submitted questions throughout this presentation. If you could open up the Q&A tab. And if I could ask you just to read out a question and where appropriate, just give a response, that would be great.
We've answered many of them. I'm just sorry. I didn't scroll back up the top. I just have. There's one here. Recover all around, but bearing in mind the change in tax recently. What's your sense of why this will not merely revert to a higher tax environment? Because the Minister of Energy understands that if you tax an operator less, he will get his taxes back. Via royalties, which you have to pay, via more employment in PAYE and through higher activity with rigs, workover rigs, swabbing rigs, all the contractor environment in southern Trinidad. They say that when activity is high in southern Trinidad and there are multiple rigs working, that receipts go up in the local banks, and they're going to spend that. So it's all about making sure that activity starts in the right place, which is with the operators. And the Minister of Finance is a very robust man, a very bright man, and clearly he has understood the message that we've been giving him for a long time. So we got to get back to drilling the industry, and I think that. In this current world globally, how many regimes have given a progressive break in anything? Well, not many. So I think that the message is pretty well understood. And as Jeremy said earlier, we are lobbying extremely hard, using the same routes to lobby as we have done for the onshore with other oil companies, with the High Commission, with the Energy Chamber, on the offshore older oil and gas fields as well. So we are, hopeful that will happen as well. Jeremy, do you want to add to that on local tax receipts?
Yeah, sure, Bruce. I think what you've said there, from a national perspective, the government has said that there is clear understanding there's an energy transition in place. So exploiting the hydrocarbons while it's still relevant is a key strategy. Finding the right way to do that, they've attempted through one approach to reduce the tax burden for the onshore to allow activity there. Unfortunately, a pandemic has happened just on the heels of that being changed, so there hasn't been much activity. But I think there's a clear understanding that the tax regime, particularly SPT for oil production, is not productive in terms of getting projects sanctioned and moving them forward on a wider scale basis. So whilst we may be able to move projects forward, what they really want to put into place is something that allows the wider industry to benefit, and as Bruce says, increase the pie and thereby increase the position rather than strangling the pie and not being able to get extended receipts.
Thanks. There's another question from Adrian, Jeremy. With rising WTI and Brent, why hedge almost half of production in 2021? Is the plan to reduce this hedge percentage for 2022? You might want to.
Yeah, thanks, Bruce. Interesting question. We started hedging in 2017. In the first year there, we put puts in place. Puts are very expensive, but it does give you peace of mind in that if the oil price goes down to a certain level, you'll still be able to have a certain level of cash flow. And your cash flow is what we use to drive the level of investment that goes into the business. And it's very clear that we want to grow the business. We want to continue investing. So we need to have certainty around that. And the hedging allows for that. So the plan is to continue to hedge on a going forward basis. Where the oil price is higher, it's actually cheaper to hedge, which is why we set market orders in place to capitalize on oil price spikes. And we managed to do so where we've had oil price spikes for as little as 15 minutes. And we managed to capture the right hedging and the right pricing terms for those. So the intent is, although the oil price is high, it's to use the high oil prices to get cheaper products so that when you have downward volatility, you're protected, you have your cash flow protected, and you can invest as is planned, at least to your cash flow planning in relation to your hedging. So it gives us peace of mind, it gives us continuity, and it gives us the ability to keep moving forward.
Thanks. There's from Adrian, can you kindly share, oops, I've just lost it. Can you kindly share what is the % of Capex for 3D seismic for 2021 and expected Capex for 2022? We don't start putting our plans together for next year until late summer, early autumn. And I think Capex plans for 2022, a lot will depend on new business developments and on the outcome of the interpretation of the onshore 3D and where we attack that. So those numbers aren't in place yet. Percentage of Capex for 3D seismic, it's pretty small, 10 to 15%, I think, from this year's total Capex is what that would be. Yeah.
Just jumping in, obviously, feel free to carry on if there are other questions, but obviously just mindful on time and that we're coming up to the hour, but please feel free just to scan through, and if there are further, if not, of course, we can provide any questions for you to review post this meeting.
Yeah, I would say, looking at them, we've answered most of them through the presentation, but of course, please fire in any more that you may have, and we will get them out as soon as we possibly can. But I think on my screen anyway, we've covered just about everything there.
Well, that's brilliant, Bruce. So perhaps I could ask you, if I may, because I know investor feedback is important to you. So ahead of just perhaps redirecting investors, I could ask you for a few closing remarks.
Yeah, thanks. So Trinity, it does what it says on the can, and we've delivered, another year as we laid out and hit our targets. And that's fine. And that was done in a really difficult year globally, and all testament to the team and good planning and great execution and hard work. But this is a very different year for us. It's a real year of potential change. And this is, again, by design. We have been lining these things up for a year or two. The care relationship goes back to 2012. But we're now, got 2 data rooms on the go. We've got the onshore on the go. We've got Galeota on the go. And, automation, 3D seismic. So it's a very exciting time for us to be in such a robust position as a company, when I think that the kind of market in terms of the oil and gas market is open for us to grow our business.
Bruce, Jeremy, thank you very much indeed for updating investors once again. Thank you to you both. Could I please ask investors not to close this session, as you will now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments and will be greatly valued by the company. On behalf of the management team of Trinity Exploration and Production, I'd like to thank you for attending today's presentation. That concludes the session, and good afternoon to you all. Thank you for your time.